Good morning. Welcome to Stock Market Today. It is Tuesday, Election Day, November 3rd, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Daily stock ideas to consider. Hits your inbox every trading day before the market opens. So, U.S. equities finished higher on Monday with value a big outperformer on the day, and that is a subtle shift that continues to play out under the surface of the market. Energy, materials, and industrials were the standouts. Comm services, discretionary, and tech lagged, and we're going to take a look at tech a little bit later on in the show as it breaks down on a relative basis. Treasuries were mixed with the curve flattening. The dollar was stronger on the major crosses. Gold was up 70 basis points. WTI crude up 2.8% after getting utterly decimated last week. Leading performers, as I said, energy, materials, industrials, and REITs. Underperformers, comm services, discretionary, and tech. So kind of the big offensive leaders over the past couple of years could be coming under some pressure. As we get to the desk this morning, S&P futures are up 1.5% following Asian markets trading sharply higher overnight. European markets are also rallying, extending Monday's bounce. Treasuries are weaker, continuing to be under pressure here. That's happening across the curve. So we have rates going up, coinciding with that value trade continuing to do better. We have to start to ask ourselves what the market is pricing in. The dollar is under pressure against the major crosses. That's an encouraging sign if you're bullish risk assets. Gold is up 40 basis points. WTI crude is up 3.3%. To kick us off on election day, that starts out with me telling you I know there is an election tonight. And the simple fact of the matter is I don't care from a market perspective, right? To trade the election, and I don't mean I don't care. I don't care to trade it. To trade the election, you have to get three things right, in my opinion. You have to have confidence that we are going to know who the winner is tonight. You have to have confidence in who that winner is. And then you have to have confidence that you know how everybody else is positioned in the market such that you're going to get paid for being right on your view, right? If you nail the first two, if everybody else agrees with you, who cares? All you are is consensus. You're not going to get paid there, right? You don't get paid for being consensus. Right? Especially if everybody else has beaten you to the positioning, right? So here's how I view it. Support is at 320. Resistance is at 340. Those levels break, act. We stay within that range, do nothing. If you're looking at the Qs, 260 is support, 280 is resistance. If those levels break, act. We stay in the range, do nothing. IWM is probably the most interesting. 140, 145 is support. We stay above that, continue to focus on the relative strength. All three remain oversold by our work. So if you were inclined to be aggressive, I guess you would say to yourself, we're oversold above key support. I don't necessarily think it makes sense to be a hero. But my point is, it's going to be easy, especially later today, into tonight, and certainly tomorrow, to see the headlines, to feel the FOMO. You shouldn't be reacting. You should be responding based on your plan, based on a roadmap. 320 breaks on the SPY. We're probably going lower. We're probably going to 280. You have a shopping list ready if we get down there? Is your risk management process honed such that if 320 breaks and your stops are triggered, you're getting out, no questions asked? That's how I view it. It's obviously going to be an emotional couple of days, but I think hopefully we know who the winner is tonight. Our market in a minute. Stocks rallied yesterday on election eve. Technology under relative pressure, and it's breaking the consolidation. We're going to take a look at that. Relative base building in the financials. I'm asking the questions, as well as I'm wondering if regional banks are on the verge of a personality change. Futures, as I said, point to a higher open here today. From a power bar perspective, some improvement yesterday, but no real change to the ratios in terms of positioning, right? Dow added 1.5%, 1 to 7 bulls to bears. S&P 500 up 1.1%, 102 to 111 bulls to bears. NASDAQ underperformer, and this is something I think we need to be paying attention to. Don't know if it's going to continue to play out, but tech growth, the NASDAQ has been consolidating since the beginning of September. Go back to early September when I showed you on a Friday of this show, when I showed you the growth over value chart, and I said, that's extended, don't chase it. We're still working off that extended position. The question is it a stall, a correction through time, or are we going to turn lower? Tech is part of that group. We're going to take a look at the chart. Bonds uptick, sending yields lower. Energy was your best group yesterday, up 3.5%. 3 bulls, 12 bears there. According to the Chaikin Power Bar, small cap stocks are more bullish than large cap stocks. Major indexes are mixed. Sticking with our theme of Tuesdays and Thursdays, running with a screen. I didn't overthink this one. We have a screen that we call Classic Bulls. Classic Bulls are stocks with very bullish or bullish ratings that are above their rising long-term trend line that show a 6-month high in both Chaikin money flow and relative strength, 6-month high persistency. I like stocks that are above $10. And when I ran the screen, now the screener updates after our ratings do, which is why you might see some neutral names here. But these are just kind of names that if the market were to trade down sharply on a news event, these are names I'd probably look at as potential opportunities, have on a watch list, be doing work on. I'd want to know their stories. I'd want to know whether or not their trends are sustainable, right? You might recognize Freeport-McMoRan. It was yesterday's stock of the day, which rallied over 5%. So I think that that's interesting. Here's some names that you could take a look at. It's just, I'm not overthinking it here. We have an event coming up. That event has the potential to be volatile. What's interesting about this group is I don't care which way the volatility goes. These are names I'd be looking at either way. So if we broke to the upside in the SPYs, broke through 340 for a continuation of the uptrend, I'd still be looking at these names. What's kind of interesting is, with the exception of Zoom, which was bullish yesterday and has obviously turned neutral today, you don't see a lot of the grow, Momo names on there, right? Pinterest is interesting. Pool, okay. But you're seeing some of the other names that are in the areas of the market that are shifting. So that's kind of interesting to me. Screenshot this, print it out, save it. I think if you were building a watch list, these names deserve some consideration to be on it. Taking a look at the sector tracker now, moving to the last 5 days. Materials, energy only groups higher. You know how I feel about materials. You also know how I feel about energy, although I'm intrigued enough by the sentiment in energy to be paying attention to it. I have a ton of stuff that I've been reading and will continue to read, so I feel confident about the space such that when the trend does turn, I can have the right level of conviction. Real estate, financials, utilities round out the top 4. Industrial staples, comms, middle of the road, and healthcare, discretionary tech at the bottom of the list. And that's just kind of interesting, right? Tech, though, we have to worry. If tech is breaking down on an absolute basis, I think not so much worry, but we have to be mindful of the fact that it is such a large weight in the S&P 500, right? So we don't want to see tech break down. It can underperform, i.e. go up less than the rest of the market, but you don't want to see tech breaking down. That's a headwind to a bullish equity stance, in my opinion. The market doesn't care what I think about that, right? That would only be confirmed if tech is also breaking down while the SPYs break 320, right? You see how all this works? It all comes together. Our industry in focus, healthcare, equipment, and services. Past 6 months, let's call it an inline performer. Outperforming slightly by 1.2%. Power bar ratio is weak. 17 to 11 bulls to bears, currently ranked number 14 of 21 subsectors. So kind of a mixed group. We want to avoid ortho, pediatrics, kids, tandem, diabetes, TNDM, and cryoport, CYRX. They all have very bearish ratings. The fund itself is bullish. Money flow is mixed. It's oversold. It's outperforming. I mean, I lean more bullish than bearish here, despite the ratio. Obviously, this is kind of interesting, right? Because healthcare equipment kind of straddles that line between healthcare, but it's a lot of these are technology stocks as well. So it's kind of interesting. And we need to be mindful of what's happening with tech, right? But at the same time, you have healthcare dynamics. It's a really fascinating space. I'm gonna defer to the bullish rating and the strong trend for now, while being mindful that healthcare is a group that's in focus at election time. So we'll watch it. I think it's an interesting group, and it is outperforming. So why wouldn't we pay attention to it? Let's look at yesterday's movers and shakers. Mohawk following through, also caught an upgrade. National Oil, Varco up with energy. URI, some construction data sent that stock higher. Lowe's reported earnings, and Align continues to follow through after their massive earnings response last week. ALGN, a super interesting name. Again, and they're, at the end of the day, they're kind of a medical tech company, right? Medical devices. Loser side of the board, Twitter follows through to the downside. ServiceNow, didn't see anything company specific there, down 4%. Love down 2.8%. Norwegian Cruise Line 2.7%, and Charter. Norwegian having to do with potential for rolling out or extending some suspensions, and Charter, there's some concerns in the cable space in general, as we all are cutting the cord. I can tell you personally, I stream all of my TV content. I've cut that cord, and I think that is going to continue to be a trend. All right, let's dive into the charts because it's relative strength day, and this is the one that jumped out at me. There's just no two ways about it. A monster uptrend that barely ever really broke the 50-day moving average going back over a year, right? This chart goes back a year. It's XLK relative to SPY. And you can see it's come down from time to time and periodically tested the 50-day moving average, but never really broke it in a meaningful way. That's changed now. At the same time, we've broken out of the consolidation, all playing out while we have a series of lower highs on the RSI of the ratio. And while on an absolute basis, we're kind of holding above a support zone. I think that 110 key level is XLK is 110. Obviously, it's a buffer zone. You definitely don't want to see it break below the February highs. That'd be pretty bad. For the ratio, getting back to that, we're still above the 200-day, so potentially some support there, rising 200-day. But near term, this picture has turned dicey. I'd love to see it snap back. But for me, if I'm going to get excited about buying names in the technology space, I got to see some stabilization here. Until then, you're catching the knife. I don't know where that stabilization is going to play out. As you know, I wait for it to start to move before changing my view. And right now, we've moved to the downside. Will 200-day be support? I don't know. I hope it is, because tech is 25% of the S&P 500, so we don't want to see that breaking down. Financials are kind of interesting. Potential rounding bottom here on a relative basis. XLF relative to the SPY. Base building, dancing with the 50-day moving average as the RSI logs a series of higher lows, all while XLF continues to consolidate after the initial rebound off the March lows. I think this is really interesting. Potential shifts under the surface, right? We've been talking about the yield curve steepening, so it makes sense that we'd begin to see the fins doing better, right? If the fins don't do better in an environment where the yield curve steepens, especially the banks, well, you got a bigger problem there. You got to kind of, and then, you have to figure out who's who and who's leading who and what's more realistic, right? So it's really super interesting. And speaking of, this really jumped out at me as well. Here's KRE stabilizing above moving averages, 50 and 200 day. This is KRE on an absolute basis in the top. The RSI, potential shift to bullish ranges, all while KRE makes a rounding bottom potentially relative to SPY, on the verge of a personality change by our work. We're going to watch this one play out. I think it could be interesting in the days and weeks ahead. That's going to wrap us up. Happy election day, everyone. Take us for a test drive. ChakinAnalytics.com/test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.